from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a breakout year for crypto. That is how Coinbase COO Emily Choi described 2021. But is a crypto winter ahead? I'll ask her in an exclusive interview coming up. Plus, he's been a key exec at Facebook, Google, and Xiaomi. Now, Hugo Barra wants to help you test for COVID in the comfort of your own home. We'll talk about his new FDA-approved PCR quality home test. And misinformation has already made its way to the Metaverse. Could virtual worlds be even harder to police than social media? We'll discuss. All that in a moment, but first, it was a big day for news from the Fed. Ed Ludlow here with more. Ed, take it away.
Yeah, final Fed meeting of the year. The stage is set for 2022. The meeting signaling 3 quarter-point hikes in 2022. And the Fed's also going to double the pace of its tapering to $30 billion a month, meaning they'll finish earlier than expected. And the gap between the end of tapering and liftoff for rates seems much narrower than it did perhaps a few months ago. This is a hawkish Fed. Mr. Director, bring up the markets on the board. And you can see green on the screen. Equity markets took a few moments really to find their feet following the Fed meeting, but you can see green on the screen, broadly a rally, a relief rally of sorts across US equities. But a lot of that in technology stocks, really interesting to get our heads around. The outlook for higher rates, yet tech stocks are rising. The NASDAQ 100 up 2.4%, and also some of those mega caps doing exceptionally well. In fact, the biggest jump that we saw was in semiconductors. The Philadelphia Semiconductor Index up more than 3.5%. Then there were some specific names, and a lot of the messaging around the Fed was, yes, we will fight inflation, but the economy is strong. That seemed to give equity investors a lot of confidence. You see names like Apple, Nvidia, Microsoft, all of these mega cap tech stocks that were negative when the Fed first announced its rate policy, jumping over the course of the afternoon session. Very quickly on Apple, we had some breaking news, by the way, after the market closed. Apple's return to office policy is, quote, yet to be determined. You know, this has been the theme in Silicon Valley. When do we get people back into offices? Omicron, of course, top of mind for a number of investors. And just to end on, I want to think about that jump that we saw and bring up Nvidia. This is the drama of Wednesday afternoon. You know I love drama, Emily, and I love the Federal Reserve and the meetings. We were negative just after that decision hit, and yet by the close of play Wednesday, we're up 7.5%. This is a bullish market in response to what is a very hawkish Fed.
All right, Ed, thanks so much. Again, Apple had set that date to return to work to February 1st, and now they're saying that date yet to be determined. Ed, appreciate it. The world of crypto also paying attention to today's Fed meeting. We saw a bit of a jump in Bitcoin after news of a coming rate hike. I spoke earlier with Coinbase President and COO Emily Choi about the crypto roller coaster and whether we're riding into a crypto winter at the Bloomberg Technology Summit.
We do not make any predictions about winters or summers. What I will tell you is that everybody who kind of disproportionately benefits from crypto tends to just ride it out on the long term and be holders throughout the ups and downs. It's definitely not for the faint of heart. The thing with the winters is the OGs in the space absolutely love the winters. Like Brian Armstrong loves a winter. And the reason that they love the winters is, frankly, the fakers get out of the space, the builders keep building, they can focus without all the crazy hype around.
The fakers, ouch.
Well, you know, what you'll see is that there, in whatever the next winter is, there will be companies that talked a big game about crypto, but then will pull out. And that's great because it means that the mission-oriented companies and the mission-oriented builders will stick through it and get disproportionate value as crypto grows. For Coinbase, the thing I learned was that we took advantage of these downturns to kind of buy Tagomi, which was the foundation for our prime brokerage. We bought Zappo, which was the foundation for us to be the largest crypto custodian in the world. So we tend to double down during those times when everyone else is fearful.
So talk to us a little bit about how crypto winters work, because as you say, a lot of new investors are here, and especially over the last couple of years, a flood of new investors. They get scared, they go away, they don't understand the cycle. How would you describe the cycle and what to prepare for?
I would describe the cycle as basically every cycle of crypto, there's been a new high and then there's a low. And with that low, there's actually a higher trough. So if you look at it on a short-term basis, what happens is it looks like, oh my goodness, it's crazy. And then if you look at the long term, it smooths out and then it creates this new higher kind of peak every time. And so, it's just one of those things where you have to truly believe in the idea of it long term. And if you stick through it, it's great. If you're a short-term investor, it's probably not a great thing.
Last week, Alessia Haas, your CFO, said at the crypto regulatory hearing on Capitol Hill that Coinbase now stores about 12% of the world's crypto assets. That is huge. How much bigger can Coinbase become, and how fast?
I think that we can become bigger and bigger and bigger. I think that we have opportunities on multiple fronts of the business to become bigger and bigger and bigger. And I think that the 12% is representative of the kind of trust that we have. And this goes to the Zappo acquisition that I was mentioning. We bought Zappo because we recognized that that was a very unique asset, doubling down on this store of crypto that this custodian had kind of accumulated over time. And that helped us kind of create the foundation to continue to build Coinbase custody. And so when you think about that 12% number to me conveys the trust that both our retail and institutional investors have in parking their assets at Coinbase.
It seems like legislators are paying attention to crypto, but there is not broad agreement in any way, shape, or form about how crypto should be regulated. What was your takeaway from that hearing?
I was very optimistic after that hearing. If you heard the tone and tenor, it was so positive, and it was almost this acknowledgement that the U.S. is so behind the times in terms of approving a Bitcoin ETF, in terms of the innovation that's starting to kind of go offshore. And so I felt like it was this like reckoning, almost like an acknowledgement that we need to make sure that innovation and entrepreneurship happens in the United States. I think that with any of these new technologies that are kind of not quite fully understood, you're going to have dissonant voices. You're going to have people who don't understand it. But what I heard from that, which made me really happy, was that these lawmakers wanted to actually learn more and embrace it more.
So what can and should regulation look like?
For us, what we've asked for is very simple. We just want one regulator. We don't want a new regulator per se. Maybe we could, but it's really about one regulator so that we can have much more clarity about the whole kind of cradle to grave activities that one uses with crypto. And so that's what we're asking for. And I think right now there's not clarity. I think we've mentioned that we have more than 50 regulators alone in the US. And we can navigate that and we embrace it. We've always leaned into regulatory. But for the crypto ecosystem to thrive, we need to have fair rules, we need to have transparency, and we need to have more clarity.
Now, there were some pricing glitches on Coinbase yesterday that showed astronomical prices for a time. Some users thought they had hit the jackpot. What caused that?
We are dependent upon another provider, CoinMarketCap, for data, and so there was a glitch. It didn't actually cause anything other than the superficial thing that you saw with the pricing. I think it's honestly just one of the things that is kind of indicative of an emerging industry. We're still building out infrastructure to make sure that this stuff scales in the right way. And so when we have providers that sometimes have those glitches, we're going to be impacted by that.
Right. So as you say, these glitches and outages do happen, and they happen kind of frequently. What sort of safeguards do you have in place to prevent them, and what kind of infrastructure do you imagine building over the longer term?
Yeah. You have to remember, crypto is 24/7. It's always on. We have literally never seen the type of technology scaling that we would need to do for this, given the number of users and requests per second that we get. And so it's an exciting thing for us because we have these new milestones almost every week where it's like, okay, well, this was the big, hairy, audacious goal not too long ago, and now just blew through that. So we embrace the challenge, and we're investing a lot in making sure that our infrastructure scales a lot faster and creates more reliability. I think for us, as we grow through this and we're building out that team, the infrastructure team and all of that, I think the big thing for us is just making sure that we communicate very clearly with customers about what's happening, so they're not surprised.
Right. And what do you have to say to customers who are wondering, gosh, is my money safe with you? Is my money safe in crypto?
I will say, I mean, this is the bedrock of the company that Brian and Fred built, which is security, safety, ease of use. And so we have never had a hack on the system. It's something that we double down on security every year. We are always on top of every new emerging technology that exists in the security space. And I feel really confident about where we are on that.
How do you deliver and transact crypto if there is no internet? Half the world is still not connected. How do you think about that question, especially as you think about how do we get more people of color, more women into crypto? Twice as many men as women own crypto to this day.
Yeah, in a world where you have a mobile phone, you basically have the equivalent of a bank in your pocket now. And that's where we want to make things like crypto to crypto more accessible around the globe to people who have been historically underserved. And I think that's the cool thing about crypto is it sees no color, it sees no gender. If you want to learn about crypto, if you want to get into the crypto economy, you basically just have to hustle and really understand the space and get involved. And I think that's the coolest part of it. We're excited about how that affords access to everyone in the world.
You can catch more of my interview with Coinbase's Emily Choi from the Bloomberg Tech Summit, including her thoughts on the metaverse and much more at Bloomberg.com. Well, a pivotal day coming up in the fraud trial of Theranos founder Elizabeth Holmes. We are nearly 100 days since the trial began back in early September. Closing arguments are set to begin Thursday and will last until Friday when the jury takes the case. 37-year-old Holmes faces up to 20 years in prison if convicted on charges she deceived investors and patients about Theranos' blood testing capabilities. Coming up, a new PCR quality COVID test from the comfort of your home. We'll speak exclusively with the healthcare diagnostics company that wants to make home testing as accessible as smartphones. Next, this is Bloomberg. These are live pictures from the Washington National Cathedral, where its funeral bell is ringing 800 times in honor of the 800,000 Americans who have died so far from COVID-19. And as the pandemic continues to grip the world and the Omicron variant is spreading fast, more measures are needed to slow the spread of COVID. Now, the consumer healthcare diagnostics company Detect is releasing a new at-home COVID test with PCR quality. Hugo Barra, once an executive at Facebook, Google, and Xiaomi, is now the CEO of Detect and joins me now with more. Hugo, great to have you back with us in your new role. You launched this test today. Talk to us about the first day of sales and the reaction so far.
Hi, Emily. It's great to see you again. So we went live today on detect.com, which is our e-commerce shop on the web. Selling the Detect COVID-19 test, which is the most affordable PCR quality test in the market today. We're selling it for $49. It gives you essentially the equivalent of a PCR lab test in 1 hour at home. And we've just started selling today. It's going extremely well. We do have quite a bit of inventory, so we don't expect to sell out or anything like that. It's coming, we think, at a time of pretty urgent need. You just highlighted it in your opening remarks here. We've hit this incredibly sad mark of 800,000 deaths in the U.S. alone, heading into a potentially really scary mark of 1 million deaths. And sadly, I think we may be headed into a bit of a perfect storm in this holiday season with obviously the Omicron variant approaching. Dr. Fauci said this week, the likelihood of breakthrough infections is 3 times higher with Omicron than it was with the Delta variant. Obviously, people are going to be traveling, so we are concerned and trying to participate in providing solutions to people in this pandemic. So folks can gather and travel with a bit more peace of mind.
Now, a lot of companies, schools, events, airports, they want a PCR test result. You say this is PCR quality, but is it a PCR test, or doesn't that have to be done in a lab?
It's a molecular test, and most, not all, of the countries that require a test for inbound travel require a molecular test. So for example, Canada, the UK, most European countries, they require a molecular test. And we are a molecular test, which is PCR-like in its quality. What we're doing, just to explain what a molecular test is we look for the genetic material of the virus in that sample, and we amplify that many times, so we can detect its presence much earlier than you would with what is called an antigen test, right? Which are sort of the more commonly known rapid tests on the market. But with a PCR quality test like ours, we're at least 50% more sensitive than sort of the even highest quality antigen tests in the market. So we can detect the virus much earlier, which is why airlines and some of these markets that require testing when traveling inbound are saying we need a molecular test, of which PCR is one type. And we are another type that offers the same level of sensitivity or accuracy.
Now, you've had high-level jobs at Facebook, Google, Xiaomi, almost always exclusively focused on mobile and mobile phones. And you say you want at-home testing to be as accessible as smartphones. Why use that comparison?
We use that comparison. I mean, first of all, it's what I truly believe in. I think the next sort of major wave in sort of consumer innovation is going to point us to healthcare. I would have probably said the same with medium level of confidence 2-3 years ago if you asked me, because I've been studying the healthcare segment for a while. But what happened in this pandemic was just a dramatic acceleration towards basically everything that we were going to do already, right? We've seen telehealth taking off tremendously, right? Regulatory approval for telehealth treatments, telehealth consultations is now happened pretty much all over the world. We have made tremendous progress in prescription and delivery of drugs and therapies and so on and so forth. But what we haven't really done yet is sort of that thing in the middle where you just need an answer. You need to understand what's happening inside of your body before your provider can help you make a decision on treatment. And that is precisely the gap that we're trying to focus on in here is, can we help dramatically accelerate what is known as diagnostics in the world today? And we're starting with infectious disease detection, which is a critical area where there's such a tremendous information gap, as we've seen with this pandemic, right? The lack of information solutions. You simply want to know, do I have this virus or not? Am I at risk of transmitting it to a loved one or not? So this information gap is what we think that the diagnostics world really needs to address, and that's what we're focusing our attention on.
Well, speaking of information, you led Oculus's VR division. I'm sure you've been following Facebook's pivot to the metaverse. My colleagues just reported on the first instance, they believe, of vaccine misinformation making it to the metaverse at a virtual conference in Lisbon. Do you think information is going to be even harder to police in a virtual world in the metaverse than it is on social media?
So I read about this incident, Emily, but I didn't watch it, so I don't know specifics about it. But I think I might have a bit of a different point of view as it relates to metaverse. And I think the technology industry should probably take a big step back. First of all, and even how we talk about metaverse. We talk about metaverse as being this sort of dark future in 10 of 20 years where somehow people are going to be, stuck in their homes, perhaps with a VR headset on in some simulated virtual world where they spend hours and hours in sort of this kind of game-like environment. And while this may happen, in 10 or 20 years for a small sort of segment of the population, essentially kind of the gamer types, what most of people are going to experience that they're going to call metaverse is actually something, I think, completely different. It's the idea of, overlaying virtual things onto your physical world, right? The fact that you're going to be able to walk around the world and see an augmented, enriched world and be able to communicate or socialize or, entertain, have fun, because you have sort of virtual objects and virtual presence, with you. Of course, you're wearing augmented reality glasses. That is a much more positive outlook for the future. That, to me, is a more promising vision for the metaverse. So I would reframe it to begin with. Of course, when we do get there, there will be problems that we have to solve. And there will be new privacy frameworks that we're going to have to adopt. I think the important thing to understand is this is 10 or 20 years away, right? So we have time, we have awareness, meaning we know that this stuff could be a problem. So let's get to work on it. But let's do it with a positive outlook for the future, not, I think, this kind of darker vision that somehow we ended up painting over the last few months.
Hugo, we're going to have to leave it there, but conversations to continue in the future. CEO of Detect, Hugo Barra, thanks so much. Coming up, companies scrambling to defend against a newly discovered software flaw, which could leave millions of systems vulnerable to attacks from China and other governments. That's next. This is Bloomberg. While the computing world is struggling to contain a major vulnerability in Log4j, a very common piece of open source code. This leaves hundreds of millions of systems vulnerable to attack, with the head of the U.S. government cybersecurity agency even calling it among the biggest threats she has seen in her career. Let's get more with Bloomberg's William Turton. William, why is this one so scary?
The Log4j vulnerability is basically like Pandora's box. Everything is insecure because so many things use this open source library, and also it's so easy to exploit if you are a hacker looking to take advantage of it. So, and we're seeing exactly that. There's all sorts of hackers that are trying to use this very simple vulnerability to get into all types of systems. Now, we haven't seen any kind of major hacks yet as a result, but it's just the possibilities are endless, and getting it fixed is going to take months, if not years.
So no major hacks yet, but what are the biggest fears that, there would be major hacks coming from nation states or, particularly pernicious groups?
Well, one of the most incredible things about this hack is you don't have to be a skilled nation state hacker in order to use this hack. It's about as simple as it gets. And that's kind of the reason I think so many people are freaked out. The real question is, can people patch their systems? There's a fix that exists, but can they find all the instances in their environment where they use Log4j and patch it before it's exploited?
All right, Will Turton, thank you so much for that update. Certainly a vulnerability we're going to continue to follow. We'll have much more coming up after this quick break. What 2022 holds for startups, VCs, and valuations. We're going to speak with benchmark partner Eric Vishry about his outlook and the impact the Fed might have on his investing decisions. That is next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's get back to the markets with Ed Ludlow. Ed, what are you watching?
Yeah, let's stay with the Fed. 3 rate hikes in 2022, doubling the pace of tapering to $30 billion per month, finishing that program sooner than we expected. And it was interesting to follow cryptocurrencies. Let's bring up Bitcoin, because we've been talking a lot about what Bitcoin is. Is it an inflation hedge? Is it a haven asset even? Well, I can tell you Bitcoin, during the course of Wednesday's session, behaved very much like a risk asset. It moved with equities. You see, this is around the time of the Fed decision, 2 p.m. Eastern time. We're up beyond $48,000. We're near $49,000. Earlier in the session, we were down near $47,000. So it's moving in correlation with those stocks. And it's, a big question. One that was asked to Fed Chair Jay Powell about what are the risks from cryptocurrencies right now? Take a listen.
I think the concerns there are not so much current financial stability concerns. I, of course, would support the views expressed in the President's Working Group report on stablecoins. Stablecoins can certainly be a useful, efficient, consumer-serving part of the financial system if they're properly regulated. And right now they aren't.
So there's two separate things here, right? The interaction of cryptocurrencies with monetary policy, but also the Fed's other role. How does it view cryptocurrencies? It was interesting, at least, that the conversation came up. Looking at the Bloomberg Galaxy Crypto Index, part of the discussion here has been that central bank stimulus has propped up asset prices, including cryptocurrencies that have benefited. Well, the Bloomberg Galaxy Crypto Index was up almost 4% by the end of Wednesday's session, the best in almost 2.5 weeks. And also crypto-related stocks in on the act as well, Emily, just to finish. You look at some of the really big moves. Coinbase up 1%, but names like Marathon, Digital Holdings, Riot Blockchain, and of course, MicroStrategy that holds Bitcoin, all of those much higher after that Fed meeting.
All right, Ed, thanks much. Well, pandemic-related monetary policies coming to an end with the Fed indicating it'll be making aggressive moves in response to rising inflation. I want to talk about how this could impact the world of venture capital and startups with Benchmark partner Eric Vishria. Eric, great to have you back here on the show. How closely are you following what's happening with the Fed and what we expect to happen with inflation, given that, yes, you're making early-stage bets, but have to be thinking also about the macro picture?
No, I follow it just like anybody does and have no particular expertise on it. I think at the stage that we're investing, which is typically under 5 people, under 10 people, very early stages, you have to have a decade-long view of what's going to happen. And since macro is impossible to predict day to day, it's definitely impossible to predict in 10 years. And so I think the view that we have is like, hey, is this going to be a good company over time? And if that works out, then most of the rest of it will take care of itself.
So what is your outlook then on the sort of smaller, bigger picture when it comes to startups and valuations going into next year? We've heard a lot of talk that things are bubbly, things are getting expensive. Would you agree? And are valuations going to come down?
It's been a really interesting period that way, where I think if you kind of look at all-time high, look at recent public market companies, and you look at them compared to their all-time highs, it's definitely come down. But then if you look back 6 or 9 months, they're up from those levels. And so I think the reality is probably we got a little ahead of ourselves in late summer, early fall, and everything's kind of coming back down. The public markets and private markets interact in a kind of unexplainable but weird laggy way where sometimes it takes a few months for the public markets to, if they correct, for those valuations to trickle into private markets. But these again are all the nuances don't matter that much, in the sense that at the stage that we try to invest in, if you're investing in a company at say 50 million or 100 million, or even 150 or 200 million, if the company works and we're right and it ends up being a 5 or 10 or $15 billion company, it doesn't really matter that much. And if it doesn't work, it also doesn't really matter. So it's, some of it is just the flavor of the day and not worth worrying about.
I spoke with Gary Tan at Initialized yesterday, and he had some advice, really more of a warning for startups, saying that they should get those term sheets signed pronto. I want you to take a quick listen to what he had to say.
You have to keep your company alive and properly capitalized. And the big benefit of doing that is if you could have a large war chest going into a recession, and then that allows you to build your product, your startup, your go-to-market 1,000 times better. And so in those hard times are actually the moments when the next Airbnb is born.
Some of the commentary on that he used the R word, which is very scary. Do you see that in the future? And would you agree that startups should sign those term sheets now?
Eventually we'll have a recession. Whether that happens next month or next year or 3 years from now, I have no idea. And I try not to worry about it. I totally agree with his overall advice, which is, for a company, the number one thing you have to do is stay alive to have a shot to do anything else. And so that if that requires capital, then go get that capital. Whether you sign a term sheet, in the next 2 weeks or in the next 4 weeks, probably doesn't matter that much. But I think the overall advice of get the capital you need to build the business is really critical.
We're looking at some of Benchmark's portfolio companies here, a couple on there. Confluent and Amplitude were two of your very first investments. I believe your two very first investments at Benchmark. They've both now gone public. They both had big debuts. I was looking at Amplitude shares, which are lagging from their high. Still think that's a good bet now that it's a public company and sort of out of the Benchmark fold?
I think all of the great thing about all the companies you put up is I think they're all really quality companies, and I try not to worry about what the stock price does on a day-to-day basis. I think it's just a good way to give yourself an ulcer, and not a good way to it's not something that I can really control. But I think all of those companies that you showed are great companies that we've been partnering with for a long time. But what makes me most excited is I think they can all grow very quickly for the next decade plus. Like, they have tons of market in front of them. They have great management team and leadership. And that again is going to build a lot of value over time, whether the stock market realizes it tomorrow or next week, I don't know. But I think that longer term prospect of what those founders have done and what they've built and what's ahead of them is amazing.
Venture capital firms in general have raised a ton of money this year. Does that mean they're in a good position no matter what? And where do you want to be placing your bets for 2022?
Well, you had it on the prior segment. The Fed has obviously printed a ton of money. That money is looking for returns. And so venture capitalists have raised tons of funds, and they're deploying that capital in a lot of cases really quickly. So I think it's here to stay. I think the larger macro backdrop, which is pretty interesting, is the shift that we're seeing in enterprise from a bunch of the on-prem stuff to the cloud. I know we've been talking about it for a while, but the reality is we're still quite early in that. And you're starting to see the beginnings of a new set of consumer companies. Nextdoor just went public, which is one of our companies. Discord is another one that is doing great. And so you're seeing these kind of next generation of these consumer companies emerge as well. And so you mentioned Confluent, Amplitude, Airtable, Benchling, and you have the Nextdoor and Discords of the world that are all, I think, building to be the next great companies. And I think that'll be great. And I'm sure there'll be a new generation behind that hopefully we'll find some.
All right. Benchmark Capital Partner Eric Vishria, great to have you back on the show. Thank you. Well, coming up on our next edition of Bloomberg Studio 1.0, I sit down with Alphabet Senior Vice President and CFO, Ruth Porat. We talk about her journey from Wall Street to Silicon Valley, as well as Google's hybrid work plans for the future, and find out how she manages the demand of work, family, and building a successful career. In this excerpt, I start by asking her about Alphabet's M&A strategy. Take a listen.
So the main thing that we've done throughout the life of Google is really invest in innovation. It's organic growth. And we're continuing to do that at a really rapid clip. We have then layered onto it tuck-in acquisitions and larger acquisitions, and we're continuing to be active more in the smaller ones and the add-ons, to be fair. But we think there's a lot of opportunity still ahead of us, and so we're continuing to invest in partnerships, in some acquisitions, and do think that there's still upside in a lot of different areas.
So would you say this regulatory scrutiny isn't slowing you down?
It's really important for those of us in certain leadership positions to be very focused on constructively engaging and working with regulators on what are the issues, what is it they're trying to solve, and how can we constructively engage with them. At the same time, our engineers should focus on innovation and continuing to kind of up the bar on everything we're doing, address what is most helpful for our users.
Google is facing more serious legal threats at this time in the United States than the other big tech companies. How are those conversations with regulators going? And are they frustrating at this point?
Well, there's certain elements that are frustrating because I listened to the outline of some of the proposed legislation, and I think it's inconsistent with some of the priorities for public policy. So as an example, there's a lot of focus on what is called self-preferencing. Are you putting too many of your own products together? But during the pandemic, 1 in 3 small businesses said they would have failed without digital skills. Why? Because what they were able to do is connect with their users in different ways. So if you go search for a small business, you can then go to a map and you can get directed to the small business. That's a good thing. We have 6,000 small businesses who wrote in and said, you know what, we need these digital tools and skills. Same with a number of things on racial equity, a real surge in searches about where's a Black-owned business near me, and the ability to direct people through search and maps. So I think that what's really important, and that's why I said it's about constructive engagement, let's make sure we understand what they're trying to solve and work with them on what is it that we're trying to address through products so that the products are helpful in the ways that they want.
Facebook has taken a serious reputational hit. Has that had ripple effects or created collateral damage for Google?
Well, I think that whenever there's a backdrop that's challenging, it has ripple effects. But what we're really underscoring is all of the steps and investments that we are making to really protect the ecosystem the way our commitment to our users. So we know how sacrosanct that trust is, and it's all about privacy and what are the steps that we're taking to make privacy protected for our users. What is it that we're looking at to protect content and content moderations?
Google now reaches more than half the people on the planet. Why shouldn't we view Google as a monopoly?
So, I go back to the earliest days when I first learned about Google back in 1998. And in those earliest days, when I heard about this 8th search engine, the question is, why do you actually need it? And back at Morgan Stanley, I was working with our research analyst, Mary Meeker. She actually had her team put up white pages all around the conference room and was doing this comparison. What provided the most responsive results most rapidly? And all of a sudden you could see, well, wait a minute, this Google thing, actually, maybe we do need something new. And that's been the ethos at Google since inception, is just continue to innovate to make this an ever better experience for users. And so if we can deliver on that, which is what drives people here, it's really opening the world for so many people. So that's the intent.
Alphabet Senior Vice President and CFO Ruth Porat there. You can catch more of that conversation on Bloomberg Studio 1.0 tonight, 6:30 p.m. here on the West Coast, 9:30 p.m. Eastern Time. It's such a great interview. Don't miss it later today. And coming up, we continue to redefine the post-pandemic workplace. I am joined next by the CFO of ServiceNow to talk about the shift in the C-suite in the remote world. That is next. This is Bloomberg.
I think when you look back 20 years, this is going to be one of the major developments in Detroit's history.
I think what's really important is that I've told a few people about it in the tech corporations, and my good friend Bill McDermott, CEO of ServiceNow, has made a commitment to come to Detroit.
That was the mayor of Detroit there, along with Stephen Ross, founder and chair of Related Companies, also a Detroit native, talking about a new investment called the Detroit Center for Innovation, a project to be built in downtown Detroit in hopes of revitalizing the city and turning it into the tech hub. Getting in on the action is ServiceNow. Joining me now, the CFO of ServiceNow, Gina Mastantuono. Gina, great to have you with us. Talk to us about why this investment in Detroit. I know you're talking about adding more employees there, which is interesting given so many companies right now are focusing on creating a more mobile workforce.
Yeah, I think it's a great question. And thank you so much, Emily, for having me. I really appreciate it. You know, at ServiceNow, we're really focused in totality on ESG, right? The world needs action now, and ServiceNow has an ambitious plan with our ESG efforts, and we're acting with a sense of urgency. One of the pillars, obviously, is the social community pillar. And as we think about really broadening diversity, those plans to expand our workforce in Detroit are just part of it, right? And we're collaborating with local universities to really focus on strengthening the talent development and access to opportunity in Detroit and those kind of communities. From a post-pandemic world, we're really leaning into a hybrid working model, right? And while we absolutely expect people to be working at home sometimes, we expect them to be in the office sometimes, really coming together for moments that matter, for times of innovation. But there will be times that the office is important, especially for the younger in career as they're coming and growing into their careers. And so we're really excited about the opportunity to partner with Related, and the announcement with Detroit is just a part of that.
How has the shift to a remote and hybrid workforce changed your job as CFO?
Goodness, so the role of the CFO has been evolving for some time now, and certainly the impact of COVID has just accelerated that. So CFOs are playing a really pivotal role in ensuring that we're guiding our organizations through the crisis and really making sure that we're making the strategic decisions and strategic investments to ensure that we're coming out of the pandemic stronger than ever. You know, we not only have a seat at the table, but we're really focused on asking the right questions. Our voices are asking the questions and really influencing the decisions that are going to really help drive a stronger, better business as we come out of the pandemic. And if you think about what's going on here, it's about digital transformation and really investing in how we work and how we work better.
All right, Gina Mastantuono, CFO of ServiceNow. Appreciate you taking the time to join us. Thank you for stopping by. Coming up, a work in progress. That's how WarnerMedia Studios CEO Ann Sarnoff is talking about the return to the big screen, why Warner has no plans to change its 2022 theatrical release strategy. Next, this is Bloomberg. Well, day two of the Bloomberg Technology Summit, and we were joined by WarnerMedia Studios CEO, Chair Ann Sarnoff. She spoke with Bloomberg's Lucas Shaw about the challenges in the content streaming business and the future of entertainment. He started by asking what state of recovery the movie business is in.
It's a work in progress. You know, everyone was hoping we would be on the other side of the pandemic by now, but unfortunately with Delta and then Omicron, we're kind of having to live with it for a while longer. But thankfully, people are going back to theaters. Not everybody, but certain demographics certainly are showing more of a willingness. But for us to really get back in full swing, we need the broader spectrum of ages and tastes to go back to the theater.
Who are those who are more willing, and who are those who still seem to be resistant?
Probably you would guess the answer to that, but it tends to be younger people, and I'm going to say below 35 as youngish, and the opposite, over 35, we're not seeing as much of an inclination to run back to theaters. But certain movies, we think they will come back, but I think it's going to be a gradual thing where, you know, people have gotten used to, because of the pandemic and because of trends that were happening before the pandemic with, you know, amazing content now being delivered in the home and high quality content and bigger screens. And then the pandemic kind of accelerated the needing to sit on your couch and not being able to go anywhere. But people are pretty used to that. And so I think that's the biggest competition of the theatrical, the exhibition business, is sitting in one's living room and having that content be good enough. So you have to compel, we all have to compel, the theaters have to compel people to come out, you know, buy the tickets, enjoy the popcorn, head out with the family, and watch movies again on the big screen. And it is no surprise that the movies that tend to get people out of their homes are the big action adventure movies, superhero movies, certainly horror movies. People tend to like to be, you know, scared together. Not me personally, but that is a thing. So those genres are doing well and better than others. But I really hope it goes beyond that, because we want to be telling stories on the big screen that are beyond those genres.
Is it possible, you talked about that the mix of people who will and won't go, can you release one of those big $200 million movies right now just in theaters and expect that you'll make money from it?
Yeah, that's a great question. We are about to start doing that in 2022. As you know, we stated that we would go back to an exclusive theatrical window, 45 days, with our 2022 slate, and we're certainly hoping to.
WarnerMedia Studio CEO Ann Sarnoff there with Lucas Shaw. And that does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow. We're going to be joined by John Ossoff, Senator from Georgia. Plus, we're going to be speaking with Facebook's head of cybersecurity policy, Nathaniel Gleicher, and Kiran Sinha, founder and CEO of the AR game developer Illumix. But before that, don't forget Bloomberg Studio 1.0 on deck with Alphabet CFO Ruth Porat. Catch it tonight, 9:30 p.m. Wall Street time, 6:30 here on the West Coast. I'm Emily Chang in San Francisco, and this is Bloomberg.